In the wake of recent economic developments in the UK, including a modest 0.25% interest rate cut by the Bank of England, there is growing concern among analysts and observers about the current Labour government's fiscal policies under the leadership of Keir Starmer and Chancellor Reeves. Critics argue that the country's economic strategy seems alarmingly reminiscent of the 1970s, marked by low growth and high inflation, a period known for its economic challenges. This critique stems primarily from the perception that the Labour government's recent budget has had a detrimental impact on the UK's financial health. Despite the Bank of England's rate cut, which is generally seen as a positive step for borrowers and mortgage holders across the nation, there are underlying fears about the true state of the economy. Critics suggest that this rate adjustment is not a reflection of any vitality in Labour's economic plans, but rather a necessary response to past conservative fiscal prudence. The central concern highlighted by opponents is what they describe as a stagflationary environment where the growth forecasts have been significantly reduced while inflation is expected to rise. The term stagflation refers to an economic condition where inflation and unemployment are high while economic growth slows, a scenario that the UK last experienced in the 1970s. Labour's current fiscal policies, including numerous tax increases such as the so-called jobs tax and measures impacting family-owned farms, are seen by some as retrogressive steps that echo the problematic economic strategies of decades past. These policies, critics argue, are steering the UK back to a time when unions had substantial influence over the economy and public finances were poorly managed. The forthcoming report from the Office for Budget Responsibility, OBR, is eagerly anticipated, with many expecting it to deliver a critical assessment of the impact of these policies on public finances. This backdrop paints a grim picture of Reeves's capabilities as Chancellor, with some suggesting she is fundamentally out of her depth. As the Labour government continues to navigate these turbulent economic waters, the calls for a significant shift in policy are growing louder. Critics urge the adoption of strategies that shrink the size of the state, tackle welfare reform with more vigour, and boost public sector productivity. They point to the United States as a model for economic dynamism that the UK could emulate, emphasising the need for a government that not only recognises the value of business but also actively works to reduce regulatory barriers and foster economic growth. The stakes are high as the UK economy teeters on the brink of what some view as a regression to one of its toughest economic periods. Whether Labour will heed these warnings and adjust its course remains to be seen. However, what is clear is that without significant changes, the spectre of the 1970s looms large, threatening to replicate an era many had hoped was firmly in the past.